Um, so we're gonna get started. Hi everyone, welcome to Beyond the Rounds, diversifying your portfolio with smart real estate strategies. For those of you who don't know me, I am the former administrator for CAMS. My name is Jamie Love. I'm filling in for Joanna, who's on vacation. I'm really excited to have you here and to be here with you. Um, just a few housekeeping announcements. We are going to hold all questions for our panelists till the end of their presentations, but feel free to put any questions that you have while we're going through in the chat. And then we'll also have time during the Q&A for you to raise your hand and ask questions as well. Um, there is a post-event survey for CAMS members. If you fill out the post-event survey, you will be entered to win a $20 Amazon gift card. It's an e-gift card. So in the survey, you'll have to enter your name and email so we know who to send it to. Um, but we also, at the end of the survey, have the contact information for all of our panelists today if you have any additional questions for them. Um, so this is something that I have been working on since before COVID for CAMS. And I've left CAMS, but it's something that I still wanted to do for you guys. And it's to have a seminar about real estate investing. I know we always had a lot of financial investors talking to you guys about stocks, bonds, the usual. But real estate was something that people had expressed interest in prior to COVID. Our programming changed a little bit during COVID. But now that we're back to normal and, my husband Nat has these wonderful connections with really great people to give you some unbiased information. Um, I'm really excited to introduce him. He's been my biggest cheerleader while I was at CAMS, and now I get to be his cheerleader. So without further ado, Nat.
Thank you so much, Jamie. Um, my name is Nat Love. You may know me as Jamie's husband, a lot of you. A lot of you may know me as the guy with the giant kids. Um, I just wanted to thank everyone for coming. We appreciate having you here. A little bit about me. I spent the last 12 years working in retail, in grocery. I also spent the last couple of years working for the town in the Department of Public Works in sanitation, driving trucks. I realized that, you know, that wouldn't build a legacy or allow me to spend time with my family that, I've been yearning to do. I don't want to work until I'm 80 years old, so I decided to diversify into real estate. And the reason I invited you here is because I'm a natural connector. And I learned that many of you were interested in also learning about real estate and diversifying into real estate. And I realized that there wasn't really an avenue for you to learn about real estate through CAMS. And so I decided to share these professionals with you. These are good-hearted, successful professionals in real estate and I'm excited about introducing them to you. First, I would like to introduce Frank Leon. Frank's background includes an extensive career in mortgage lending as a loan officer. He was a VP in the banking sector. He had spent a portion of his career on Wall Street. He has a diverse real estate portfolio from acquisitions, dispositions, wraps, property management, private money loans, and many other things. He also joint ventures and a lot of other things as well. He currently spends his time as a go-giver in the real estate education space in New York. Frank is special to me because I actually go to him whenever I need a thorough analysis of something and to know whether a deal is good or not. Spoiler alert, oftentimes it's not a good deal. Most times it's not a good deal. Anyway, Frank, I'd like to introduce you and you have the
Thank you. Thank you so much for that introduction. Uh, like you said, I have a extensive background in mortgages and real estate. And when I started, whether it's a loan officer, whether it's a branch manager, or a person that just teaches mortgages to different people, and you know, it was just a brand new way to learn on how to invest. So I took my time learning and seeing and whatnot. And when the opportunity came with micro lending and transactional lending, I decided to jump all in and I started doing this. And I found like I went down the rabbit hole, like all of us investors in here, and those of us that are inquiring about how to make money in real estate. And I had to learn, right? I had to relearn everything I knew. So in banking, we all know 20% down. The bank gives us 80%, and we buy a property. We're either living in it or, hopefully we can rent it out, or we're doing some type of house hack. So that's all I knew. Interest rates, mortgages, going to the bank, having them review my W-2s, my tax returns, my pay stubs, my credit report, and they're asking me a ton of questions. They want my social security. They want all my information. They want to know who my dependents are, who my parents are. Like it's a million and one questions, and it seems like it's never ending. And this is for every single property. What I found was that if you go to banks and you do a conventional loan, you get capped off at about four loans. And then you have to go to get a DSCR loan anyway, which is where the creative world starts. So I found Pace Morby. I found creative finance. And then, I needed to dive in and see for myself to see if this was something that was viable for me. So my first deal, I negotiated a seller finance deal in upstate New York. And I was able to get a 3% 10-year fixed, 10% down. And I got an investor to lend me the money to do the rehab. And I did it while never visiting this property. So I used all the tools that we have. We have Facebook Live. We have WhatsApp. Any video that I can get. I got people in the group to go visit the property to check on my contractors. I got them to do all types of videos, and I was able to close on this property. And I did it all from the comfort of my living room. And I couldn't believe it. I didn't think real estate was possible this way. I mean, I have a network of attorneys, realtors, bankers, and whatnot in New York, and I've never done a real estate transaction that way. My first couple of houses, I bought the old traditional way. I came to the bank with a check. They gave me some funding, and I bought the house and I live in it. But this was brand new. I didn't have to go to a bank. I didn't have to have my credit checked. I met my contractors through phone calls and Zooms just like this, and I interviewed them. And I picked the person that worked the best with me. And I was able to get all this done with just the connections I met. Like you said, Nat, uh, you were able to connect. You're a natural connector, and you were connecting with different people that offer different types you know, uh, of value to you, whether it's me in analysis or Kim, with coaching or whatever anyone brings to the table to you, you put them together and you make it a team, right? So I was able to do that for this deal. And now my property is worth $380,000. I bought it for 215 last March creatively, and I have a 3%. So my mortgage payment is about $800 with everything. And I rented Section 8 for 2,400 bucks. So that was my proof of concept for me. I'm like, I'm all in. I believe I can get this done. And then I met Daniel. We started doing a lot of micro lending together. We started doing private money loans where we were, in essence, the bank where we would lend money, put a lien on a property, get a nice return. So this is something that's useful for someone that, has cash in the bank. You're making 1% annually, and the returns are sometimes in the double digits. So I found ways to not just increase my wealth rapidly, but to actually make income doing this business. And that's when I said goodbye to my 9 to 5, and here I am. You touched on underwriting skills or looking at deals that are not good at first, or they look good at first and then they're not good looking deals. Well, you know me, I say no all the time. I ask a million and one questions. I do what we call due diligence, and I check to see if it's a viable deal. Is my money secure? How can I get paid back? And the weirdest circumstances, how will I get paid? Do I take over the property? Do I make interest on this? Am I getting another property in return for my money? Whatever the situation is, I try to have an answer for that. If I can answer every single question on my checklist, then it's a deal. But if I can't, then we have questions. And the more questions that I have, the more it becomes not a deal. So it's like talking myself into doing the deal, right? You're gonna say no 100 times before you say your first yes. Um, Short-term lending. So my biggest reason for joining this was I wanted to learn what transactional lending is. That's what brought me into the business. That's what brought me to the YouTube videos. That's what brought me to being the type of investor that I am. Because there was nothing like that from the banking perspective. So I had to know how to put my money into a deal without being in lean position and being able to get my money plus a very good return in less than 30 days without ever being an owner, without ever really being a lender, but being a partner on the deal, a joint venture partnership. So that's something I had to, and I learned how powerful those contracts are, how powerful having a transactional coordinator is, someone that actually knows how to speak to a title company, someone that actually knows how to keep your money safe. And that's what really got me motivated to start acquiring properties. And now I have 15 properties since April 2022. Before April 2022, I only had 2 properties. So I was able to more than triple my production in 2 years without using banks. 10 of them are stabilized, 5 of them I'm working on stabilizing, but my wealth has increased substantially. And that's me in a nutshell.
Awesome. Thank you so much, Frank. We appreciate you.
No problem.
These speakers have been my mentors, and I really could not have gotten this far if it wasn't for them. So I just want to say thank you again, everyone. All right, our next speaker is Kimberly Mahalik Blackstone. Kimberly has been over 30 years, she has over 30 years experience in the healthcare industry in multiple roles, which include being an author, CPR instructor, and a member of MAPSCDY, a collaborative Michigan initiative to prevent sudden cardiac death in youth. She is a real estate investor, business owner, wellness coach, CEO of Mahalik Mountain Ministry, a 3-time half Ironman finisher, and mama to 2 active teenage boys. Kimberly has been super helpful to me personally with my growth. She has been an inspiration, especially with everything that has occurred in her life. She's an amazing woman, and she motivates me to keep me going. Thank you. And Kimberly, you have the floor.
Well, thank you so much. And first and foremost, thank you to Nat and to Jamie for hosting this. And thank you to the providers that are here. I have 30 years of healthcare experience, like Nat had mentioned. So I know the stress that providers face every day, especially in a post-COVID world. So I am excited to share my story with how I got into real estate, which is actually a pretty cool story. So I was on the course of a half Ironman in northern Michigan, and it was 70.3 miles of swimming, biking, and running, a 1.2-mile swim, a 56-mile bike, and then a half Ironman. And in doing that race, it was my third on my 46th birthday. And unbeknownst to me, I had all these medical conditions that I've been searching for 20 years to get diagnosed. And I actually have Ehlers-Danlos, lupus, MCAS, POTS, spinal stenosis. I've had 8 surgeries in 10 years. And so just to be out on that Ironman course, pounding it out, you learn a lot about yourself, not only in your personal life, but in your career. So as I was out there for 7 hours and 50 minutes and 55 seconds, I just had a lot of internal dialogue going on. And one of them, I just was very unhappy in my career as a nurse. I had been a nurse going on 21 years. I've had lots of roles in nursing. I've been a CTICU nurse, PCU, ER, OR, ICU. I've been a camp nurse. I've done medical ministry. I'm a state board for prevention of cardiac death in youth. I've done all kinds of nursing. And so I just was really unhappy with where my career was going. I was a director of nursing for a large skilled nursing facility, 103 souls and over 40 staff. And I just did not like the care that was going on. And so on this course, while I'm pounding it out, I just kept on thinking, like, what am I doing? I know that nursing is not the vehicle that is going to get me from point A to point B on a catamaran somewhere, in the tropics. I was like, what can I actually do to just elevate? And I just fell in love with the area, and I felt moved to get a second house there. So that's exactly what I did. When I crossed that finish line, I just was like, I'm getting a house. And so I didn't know what I was doing. I just knew that this was a path that I should take. So I bought traditionally, and I decided, okay, well, I'm going to do an Airbnb, a short-term rental. And just like you guys know in New York, that certain people's choices can lead to a consequence and they can ban them. And that's what exactly happened to me. I had a very successful Airbnb, but fast forward to an ordinance that changed how I invested. And at the time, I was in just one mentorship. I was just a personal friend of Frank, and he's like, we're going to work through this, because unlike, my background was not in investing or business, but I had the qualities in order to be a business person, the grit, the perseverance, and the grittiness of it. And so I sold it on creative finance. I did a land contract and I mirrored the existing loan. My interest rate was 3.6, and then I had theirs at 6. And so I would cash flow, and then with hopes to that they could cash refi me out in 2 years. And in doing that, I really noticed how many solutions you could provide, solutions for problems. These people were unbankable. They were homeless 6 years prior, and they really made a good stride, but they were unbankable. So that's where I could become the bank. So I had this aha moment, like, okay, I have all this medical stuff going on. It's probably not good to be at the bedside around all these different viruses and things that you get exposed to as a nurse. We have all had, splashes of blood on us and different kind of body secretions. And I've been in it for so long. And that was my chance to just dive right into real estate investing. So first I started investing in myself, and I just began to fast and pray and was like, where am I getting led to? And it just kept on pointing to real estate. And so I started to study what the rich did. And I'm like, they can't outwork me. They're not necessarily smarter than me. They have a tool that I don't have. And so I noticed a pattern. I noticed 3 things that the wealthy really had. They had a trust, they had a business, and they had real estate. So I just started to invest in myself and in programs. And then Frank became my business partner, and I just started to dive into it. And just like in medicine, when you're going through residency and you're an attending, you might start off and say orthopedics, and you're like, oh, I don't want this. I want to be in the ER where the action is, or I want to be intensivist, or I want to be, a CRNA, or whatever, specialty. Like, things change. Sometimes you have to get your feet in, and you have to dabble in the areas that, your talents are in. And that's the same thing with real estate. You get in and you're like, there's all these ways to make money in real estate, and you can be a private money lender, you can be a private money partner, you can wholesale, you can do acquisitions where you're acquiring, you can do dispo where you're disposing of the property, you can connect, you can collaborate, you can do all these amazing things. So I found myself like a chameleon, kind of much like in nursing or in medicine. You just can't focus on like the kidneys or the heart or your brain. You have to connect all the systems. That's what I noticed in real estate, that I could connect the dots, and I just wasn't feeling passion towards one thing. And when you trade bedside for business and you go from codes to contracts, you definitely want to follow profit, but you also want to follow passion, because then it's not like a job. Because why leave your W-2 as a director of nursing and making, six figures when you're going to like 18, 19-hour days and, things aren't closing? It's a whole different beast. So in just constantly pivoting with purpose, I noticed just with connecting with different people, it occurred to me when I was young and in a group home and taking care of disabled adults before there were any regulations, like crushing up Xanax and putting it down G tubes and positioning patients and driving them before a license. This is like the wild west of, group home care. I was like, well, what about, taking a single family residence and making it into a care home? And so that's was my new mission. I was like, oh, awesome. I can combine business and real estate with my love of people. So it just fits. And so I then got into the Residential Assisted Living Academy. I did the extensive home version and then flew out to Phoenix and then did the in-person where I took the test. And, then I was ready to take on an RAL and got home and found an existing business. And it was perfect because the person was actually wanting to exit the business to go back to Jamaica to take care of her family. But Michigan decided to throw a curveball, just like the ordinance with the short-term rental, and change the legislative practices of how to run an AFC. And so they introduced the House bill. So then again, I had to pivot with purpose and then, come back from that and be like, okay, I don't want to be stuck in a non-performing asset. What can I do now? And so in doing that, I learned about sober living, and where you take a single family residence and you convert it into a place where people can come from recovery, and you can do, all these different type of care homes. So I really resonated with the philosophy as a nurse and as an investor, because I liked it also that your real estate was then secured by the business. So there are so many different exit strategies. You could lease the house to an operator, you could keep the business, you could scale it, stabilize it, and sell it. So I really resonated with that model, because in all my deals, I've had to pivot. It seems like every deal that I've had, it's been like the patient that comes to you that's supposed to be stable and they're getting to 2 seconds later, right? It was one of those. And so with doing that, I just really learned how to secure not only like my investing partners, but potential partners with paperwork, and always having, collaboration, that you can go to people like Daniel and like Frank with questions, because what my weaknesses are, that's their strengths. And so that's kind of how I got into real estate. I'm definitely more entrepreneur based. Like Nat said, I'm an author, I'm a coach, I still teach CPR. So I definitely project based, but I really like the care home structure because it's also protected with the Federal Housing Act. It's a vulnerable group, and so they protect that. It doesn't matter what state regulation says, it's federally protected. And we're in a silver tsunami. When I was in Philadelphia working at Hahnemann University in the CTICU, they had adult daycares back then. And now with being 1.3 million beds short, it just makes sense. And so now I'm actually pivoting to Indiana, because I live in the state shaped like a mitten. I'm right here by Chicago. So I border Illinois and Indiana and Ohio. So I'm just now going to move over to the next state and try, the whole concept, live where you want, invest where you want. So it's just something that I learned along the way, how you can use these tools and these resources to gain wealth for financial freedom. So you're not shoving your money underneath the mattress. It's not sitting in some CD or some other non-performing asset where you're getting 2, 3, 4%. You can actually have a really good return on your investment. And not only that, but you have a hard asset that you can grab equity out, that you can sell, you can move differently. And it's just a way, to gain that financial wealth when you are in debt from student loans and you're pounding it out 40, 60 hours into practice and trying to get a hold financially from your student loans and all your debt. So it's just another vehicle to get to point A and to point B. And for me as a nurse, I just really noticed that you can just solve so many problems with creative financing. And that's what I'm doing now. And I'm actually working on my second and third book. One's a kid's book, one's about my story. And I just continue to, work with lawyers for changing the legislative practices in Michigan to amend the bill. And then hopefully I can reinvest in my own state. But you really can utilize real estate and healthcare to connect, collaborate, consult, and essentially close and build that wealth. And also, I do keynote speaking. So talking about medical topics like Ehlers-Danlos and lupus, they're saying that there's only 11,000 practitioners actually that can diagnose it. So if there is ever an opportunity for speaking to be a walking, talking example of what Ehlers-Danlos is, I would love to be included on that. I could go on and on about my love of real estate and about all the projects that I'm doing, but for the sake of time, I'm going to wrap it up. And if you want to connect, I believe that Nat and Jeannie are going to put our contact information in the sidebar or an email. And if you want to hop on a call and just do a discovery call to see if these types of ventures are right for you, I would love to have that opportunity. So thank you again for your service in the medical profession. And I salute you for all the work that you do, because I know it is a very hard job with sometimes little appreciation. So thank you so much. I appreciate it.
Thank you, Kimberly. That was awesome. Really great information, interesting stuff. I love that you can really help people in real estate with things like and sober living and that type of stuff. So
Yeah, absolutely.
thank you. Thank you for that. All right.
You're welcome. Thanks for having me.
Much. Our next speaker is Daniel Wang. Just a little bit about all of our speakers. They've been so important to me over my real estate journey. Each one has been really instrumental to me and a mentor. Daniel Wang, specifically, let me talk a little bit about him. He is the co-founder of Sagax Equity Partners. He is a trilingual investment strategist with an exceptional track record, managing over $250 million in global supply chain assets. With a heritage connecting Argentina to Taiwan, he brings a diverse perspective to creating generational wealth through creative real estate and business acquisitions. Daniel's expertise in global markets is the cornerstone of Sagax's success in cultivating and identifying prime investment opportunities. He is a thought leader in investment innovation, and Daniel is dedicated to guiding investors towards creative, prosperous outcomes. Daniel was one of the first investors that I had met, and he is a man with a vision. I like to think of him as a friend, and I really look forward to a future with him in it. Daniel, you have the floor.
All right. Thank you so much, everybody. Thank you, Nat. Thank you, Jamie, for putting this together. I appreciate everybody. Thank you for having me on. Thank you for the intro, Nat. I come from a pretty diverse background. As you mentioned, I was born in Argentina. Parents are from Taiwan. I spent a little bit of time in Argentina, went to international school, so that's probably why I don't have an accent. Came to the United States when I was 10 years old, grew up here most of my life. Went to college at Rutgers, kind of local for most of these members here. Graduated 2008, financial crisis at the fall, September. Watching the stock market, everything crashing, the world going down. Was not fun. It was not a fun time to graduate college. What happens was, I ended up kind of, trying to figure out what I wanted to do. Initially, I had an idea of going to law school, but school is always there, right? I can always kind of go back and figure that out. So instead, I took a chance on myself and got into international trade. So what that means is, you ever seen those giant container ships getting shipped all over the world? I was basically buying and selling, different commodities around the world. So I've done deals, from Mexico, Canada to Europe to South America, all the way to Dubai, Bahrain, Qatar. I spent a lot of time in Asia, Taiwan, Japan, Korea, Southeast Asia, Vietnam. I even been to pretty weird countries, I've been to Myanmar. I got stories for days. I just want to keep it short, right? Long story short, got really burnt out from that industry. I was living in hotels, about 8, 9 months out of the year. Don't see family. Lost my dad through cancer, and so I kind of took off from that. And so I kind of cashed out of my business partners, and I kind of hung around for a year or two, trying to figure out what I want to do. Most of the time is what do most people do when they have some money, right? They just buy real estate. And so the only thing I knew was, go and Chase Bank, put 20% down, um, you know, fix up the place and then renovate it, right? What most people call it a burr, right? I mean, I'm sure you hear it all over the place. I started doing a ton of burrs. Eventually got up to 30 something units, ran out of money. So I'm like, how do these guys get 100 properties, 500, 1,000 units, right? And so you start researching how these people leverage other people's money. So they call it OPM, so other people's money. So even people that do a lot of deals are doing a lot of these large scale portfolios. They're always using somebody, either the bank's money or they're using a private money lender's money, right? And so after I did that, I started learning how to leverage other people's money, and I started, doing deals with other people. So at the peak of, let's say, about 2020, 21, I was sitting on a substantial amount of equity on all my rentals, cashed out, and I kind of refied a lot of the properties that I had. I'm sitting on 2%, making a substantial amount of cash flow every month. So my goal was to kind of sit on, I have money now, and so what do I do? So I became people's investors, private money lenders, and so I started lending out my money, high yield. I was getting decent returns, and can't complain. Along the way, I met Frank and Kim, and we kind of connected and started doing different deals together. So long story short, once I, created, started doing private money lending and all that, I created a fund, a private equity fund. It's sort of a hybrid. So we do go after larger multifamily properties, as well as we're looking for single family portfolios. So what I mean by that is we'll try to buy 10, 20, 30, 50, or 100 at a time, using some sort of creative financing, right? So the game is to use as little cash as possible to acquire those properties, right? Whether it's we bring in private financing, we use our own funds, we buy cash, we can come in and buy the whole thing via cash and refinance with a lender or private lender. There's a bunch of different ways to get into those deals. Um, Especially right now when you see a lot of the commercial properties or these investors are very over leveraged. And so those are prime opportunities for somebody like me that we're going to come in and start, buying a lot of their deals for 50, 60% below what they paid for. And so that when you see the marketing where people saying like there's going to be blood on the streets, what that means streets is Wall Street, right? Because they over leverage and now they can't get um, refinanced, right? So back in 2020, a lot of these commercial lenders, investors, and all that, they refinanced into these they acquired a lot of the properties with very low leverage and very low interest rates. But then nobody ever thought that the interest rates were going to be 8, 9, 10%, right? And so, the rates haven't calmed down yet, right? So now that they can't get refied out, they're all going to be hurting pretty bad. And so we see, these are definitely opportunities that we're looking to acquire from them. Long story short, I do a lot of the education. I teach a lot of people how to, I can sit here and tell everybody how do you get, how many doors I've done, how many thousands of doors I've done. It doesn't mean anything for me right now is, I don't need another deal. So what I'm doing is I'm going out there and teaching people, how do you do more deals, right? How do you get your first deal? How do you get their second deal? Whether it's you're a professional, a lot of my family members are actually doctors. I'm actually the only, not the only, I'm the only person that's not a doctor in my family. And so I completely understand. So, a lot of the professionals, the biggest problem is, you guys, have, a lot of hours. You guys earn a lot, but you also pay a lot of taxes, right? And so, you're going to have financial advisors telling you, hey, invest in 401ks, do this, do that, Roth, but you can't really write off a lot of your taxes. And so you can definitely use real estate strategies to offset those taxes that you earn. And so I do a lot of this through either my own personal family, or I have a lot of friends who are in the medical industry as well. That's on that.
Thank you so much. Very great. That was awesome. So it looks like we do have a few minutes left. If anyone does have a question, feel free to raise your hand and we will call on you. If not, you can put it in the chat right now. If I think I'm gonna ask a question for you. So, all right, I guess I'll ask a quick question. This will be for Frank. How can I mitigate my risk if I were to invest into a project that you or your team was working on?
That's a great question. So there's a couple of things I would do here. Number one, I start underwriting the deal as if I were a bank. So that's where my expertise comes in. I look at how the deal is structured, if there's a first lien position, if there's a second lender or whatnot. And I invite you to be part of the underwriting so that you understand why I like something or why I don't like something. And I'll tell you, hey, this is a little bit risky because it's a little over leveraged, or this is a great deal because there's the person put a lot of cash into the deal and now there's no mortgage and we're lending $50,000, but it's worth $500,000 once it's finished. So we're going to make a great spread and we're totally secure. We'll just put it under first lien position. Attorney draws up a note, we record it, and they have about 4 to 6 months to make a payment on this. It's pretty standard stuff, especially when we come across first deals for the first time. I like to have, if it's a private money lender deal, I like to make it as simple as possible, as safe as possible as far as the risk goes.
Awesome, thank you. Thank you for that. Do we have any questions? Would anyone like to ask a question?
So anyone can raise their hand or they can put the question in the chat if they're shy.
Physicians always have questions. Come on, docs. Let's represent.
I got one. What is depreciation and what are some examples of depreciation or tax savings, Daniel?
I mean, potentially the easiest way to explain it is, let's say that you have a business, right? And like, let's say you're a doctor, you have your own practice, you have an LLC, and you can write off travel expenses, meals, all kinds of expenses, right? But you can only write off so many meals and so many expenses, right? Because the IRS is going to catch up to you. And so what happens is when you buy an investment property, that actual property value, you can actually depreciate it and write it off against whatever taxes that you earn. But I am not an accountant, so I cannot give tax advice. But let's just say that there's a way to kind of depreciate the asset, the investment property against your earned income.
That's why it's always important to work with people that are smarter than you in those aspects. You have your accountants, you have your attorneys, just like you don't go see an orthopedic surgeon if you have kidney problems, right? That's why it's good to stay in the lane of what your expertise is. You always find people that, have that expertise and can help you along the way. Like the trust. When I opened up my trust as a non-grantor irrevocable spendthrift trust, I know a little bit about it, but my tax attorney and tax accountant, they know what they're doing. So I trust them. Just like you have to trust someone if you're going under anesthesia or you're having a surgery at some point, you need to hand off, that responsibility to the other person. And I liked your disclaimer there, Daniel. Of I am not, this is not advice. This is a suggestion.
Right. Looks like we have a question, Oscar.
Hey guys, how you doing?
Great.
Hi.
Nice to see you.
And nice to see you too. Great presentation, guys. I really loved it. I gotta start with saying that. Thank you. Thank you for taking the time of doing this and educating all of us a little bit more.
You're
Absolutely.
welcome.
A quick question, I guess, for everybody. Just I guess as a general. What do you guys think is the best way for somebody to start? You guys think that somebody should start with, say, a little by little, getting your feet wet and start investing in some single families, or should you just go crazy and go into multifamily and try to figure that out?
I mean, it just depends on the person, right? I mean, I think most
Yeah.
people in this group are in they already have really busy day jobs. And so you want to leverage your time as much as possible, right? So maybe by, partnering up with somebody to kind of walk you through the deal. And yeah, maybe you're not going to make as much money, but at first, but at least you partner up with somebody who's going to walk you through the whole process. And you leverage their time and their background to get the deal done, right? And then once you slowly start acquiring, different properties, you have some income coming, then you start slowly shifting, away from your full-time career into real estate investing. Or you can be a lender on that, or you can be a limited partner and just be part of larger deals. It just depends on everybody's risk appetite.
Right. Yeah. Agree 100%. There's different ways to wedge yourself into deal, and partnering with people that have more experience, of course, to me is always the way to go. Because the more skin that's in the game, the more people that you have on all hands on deck. Because if you have to stabilize, an asset for whatever reason, it takes a lot of time and a lot of talent to be able to stabilize it. And if you're partnered with somebody that's over leveraged, not only financially, but with their time and their resources and their tools, it can be, very difficult to have those exits executed. And so anytime that you can partner, and some people just want to, invest with their capital, they just want to take their money and be, passive and be like, okay, well, here is $200,000 for your care home. And I just want a mailbox check every month. So again, like Daniel said, it just depends on what your level of risk that makes you feel comfortable, but then also always going with those people that know how to secure you in a good position, depending on what that acquisition and merger is or could be.
Awesome. Thank you. That was a great answer. I really appreciate that.
You're welcome.
So I have a question. So if I am looking at a property that I'm thinking about investing in, how do I know that the property is truly worth the asking price and like it's in good condition?
So are you local to the property or are you virtual?
I guess it would be virtual. So let's say like I just want to invest in like a property like in Florida or something. So,
That's a
whether
great
it's
question.
a vacation
That's a
home
great
or
question.
Airbnb or something.
Well, okay. So first things first, right? and anyone can do this. You go on Zillow, you go on realtor.com, you go on Redfin. That's the beginning stage. You're trying to see what's everything selling for, and they'll give you like 5 locations in the area. Then you need to really understand how comparables work. So you want to start thinking like an appraiser or a lender, because every property's value is subject to whatever people think is worth, right? Or whatever the property next door is worth. So you never want the best house on the block. You want like the third or fourth best house on the block, because you're compared to the best house on the block. So it brings your value up. Now, if you have the best house, you're compared to lesser houses. So your value will never be what you want it to be, right? So that's how comparables work. So if you've ever seen an appraisal, you'll see all the homes that are similar build, similar size, years built, bedroom and bath count, and then you start looking at that. So I would suggest PropWire to start. It's a free site, and then you can start working on like all the websites that actually charge you, like PropStream or Privy or things like that, where you can see. You type in an address, you zoom in. You always want to be within a mile. Half a mile is preferable. Within 3 months, and you want to see how long stuff is on market. That's super, super important. You want to see if that market is moving or it's stagnant now. And then once you have that, start making calls and get local experts to give you their opinions. This is where your network is your net worth. You want realtors to give you rental comps. You want realtors to give you how Airbnb is in the neighborhood. Tell them you're a potential investor. I'm trying to invest here. What do you think about the rental rate? You can check AirDNA and you can check Renometer, but you want as many people working on this for you as possible, and they're all free. So once you get all that data, then you can sort through it and you'll know the real value. So if something's priced at 300,000 and it's 100 days on market, guess what? It's not worth 300,000. And that's where you start negotiating.
Thank you. That was a great answer.
All right. I think a couple people just entered, so we want to give a few more minutes, just in case anyone wants to ask a question.
Nat, I have a quick question.
Yes, Christina. Hi, how are you? Nice to see you in
Good.
here.
How are you doing? Sorry, I don't know if you guys can hear me real well, but so Kim and Frank, absolutely instrumental in some things that I've been going through. So I definitely kudos to them. They're 100%. Everybody that wants to do anything, they're the ones to go to. My question is more of a how do you stay motivated? So I got into real estate investing a little over a year ago. Had a rough time pretty much in most every deal I've been in. So how do you stay motivated and not want to just walk away? I don't want to walk away, but I'm still having a rough time trying to figure out where I fit and what I want to get into, that I can find those lucrative steps to take for myself. Unfortunately, part of my problem is I work a full-time job, and it makes it really hard to spend the hours that I need to do what I need to do. But how do you stay motivated?
Well, I'll take that one because I can resonate with that, Christina, because you know a little bit of my story. Every single deal that I've done has had some kind of problem. So again, circling back to what I mentioned is finding your passion. Like if you're trying to do something that you don't like or that stresses you out, you already have enough of that in your personal life, in your business that you're doing, and all the work that you're doing outside. So you really need to find something that you like. And sometimes, you have to try all the things, and it's not that you have shiny object syndrome or you're being distracted, just like in medicine or whatever you do. Sometimes you have to work at those things to see what you're good at. Sometimes, you might not like something. So I would just be like, stick with it, stay the course, know that, just like in business and life, you have the ups and you have the downs, you have the all arounds. And sometimes you just need to figure out a rhythm that like works for you and your lifestyle, whatever that looks like at the moment. Like, me, I'm very project based because I am very active and busy doing other things in my life too. And I don't want the business to run me. I want the business to run itself. And so finding those systems, those operations, things that fit with you, with what you're already doing, I think is pivotal. And sometimes that just comes from trial and error and figuring out what you like and what you don't like, and then just crossing off the list and, moving on. And don't ever, the power of connecting and collaborating in this business is so crucial. So don't ever underestimate that. Just linking people with deals, if you know how to underwrite and how to secure them, you can make a significant amount of capital just doing that. So again, it's just, there's so many ways to make money in real estate. You just have to pick the one that you can stick with. And then don't be afraid to pivot. If you don't want to stick with it, it's okay. Just find something that you're passionate with and then just, stay the route.
Thank you. Awesome.
You're welcome.
All right. Thank you for that great question, Christina. And looks like we're coming to the end. So if anyone else has a question, let me know. If not, there is a post-event survey that you can do. Jamie mentioned for the doctors, they can win a gift card. So that's pretty exciting. So there are contact information for each one of our speakers. So if you would like to get in contact with any of us, our information is down there. Otherwise, okay, we just linked it again to the chat, so you can go to the chat and click the link for that.
And before we go, we did record the session. So if anyone came in late, Joanna returns from vacation, I think in a few days. I'm going to share the recording with her and she can send it to you directly. And she'll also have everyone's contact information from today's session. So you can always reach out to her and she'll get in contact with me. And we can just share that information with you.
Excellent. All right. Well, thank you, Jamie, and thank you to all of our speakers tonight. And thank you for everyone else for showing up. And I think that's it. So everyone have a great night. Lovely to see you on here. Hope we can do this again.
Thank you.
Have a great night, everyone.
It was awesome. Thank you.
Thank you. Take care.
Bye.